So the topic today that is being given to me, which is challenges and opportunities of Islamic banks in Indonesia and Malaysia during the COVID-19 pandemic, is very timely. So I am actually very happy and excited to share some of my views on these issues. However, I will focus in the context of Malaysia only. That is how the Islamic banks in Malaysia or how Malaysia is dealing with the impact of the COVID pandemic and how what are the specific challenges and opportunities facing the Islamic banks in Malaysia. I think for the case of Indonesia, inshallah, the input will be given by Dr. Fany. So I have prepared the slide there, and as you can see that if you can, if the moderator, the organizer can put it on presentation mode, please. Okay. So as you all know that in the wake of the COVID-19 pandemic, which actually erupted in Wuhan in December 2019, now we see that the global economy has been significantly affected. The global economy has been affected, not just in terms of the health side, but also socially and economically. So the impact is real, the impact is significant. So we see, I have looked at the data yesterday from the website of the World Health Organization. So as at 26 July 2020, the COVID-19 global pandemic has resulted in death cases of 640, this is 640,000, yeah? 640,016 death cases, with total number of confirmed cases more than 15 million cases all over the world. In particular, on the top of the list now is the USA. As you all know that the US is known as the global economic powerhouse. So the US is the most badly affected, with total cumulative cases of more than 4 million and death cases of 140, more than 100, nearly 150 cases. This is actual data provided by the World Health Organization. So we see that social and economic activities are being badly affected due to the various measures. Okay, can you go to the earlier slide? The earlier slide, please. I'm still there. So sorry, I'm a bit slow here. Earlier slide, please. Okay, earlier slide. Slide number 1. Okay, yes. So in order to control the spreading of the virus, various measures are being instituted. For example, in Malaysia, we started the lockdown period very early. And then there were closure of businesses and offices. Of course, now we are under the restricted movement order. Still, we have to observe the new norms like social distancing and so on. And still, we see movement and travel restrictions where there are closure of, especially now still applicable, the international borders. So because of these measures, economic activities are put on stop, affecting demand of many products and services. And in many countries, economic activities decline substantially. Okay, so next slide, please. So we see that from what seems to be a health crisis become social crisis, and now has become a full-blown global economic and financial crisis. Okay, so we can see that now it is obvious that the global economy is heading for a recession. There are several downward revisions of the growth estimate. For example, the United Nations anticipate that the global GDP to record a contraction, a decline. No more growth, but a contraction of 1% in 2020. And particularly in the developing Asia Pacific economies are expected to register negative growth of 0.5%. And countries, developing ASEAN economies which rely heavily on tourism especially, where Thailand, Malaysia and Indonesia are included, will be expected to be hardest hit. Okay, so because of that, we see the COVID-19 has also resulted in emerging economic sufferings among certain group of society. The impact is not even. Those who are the poor are being mostly affected or impacted. Next slide, please. So you can see over here, specifically in the context of Malaysia, several fiscal and regulatory measures are being instituted. In Malaysia, we call it the package rancangan economy, PRE, or the economic stimulus package worth 250 billion ringgit, or an equivalent of US dollar 58 billion, was announced on March 27, 2020, with the intention to weather or to soften, if I can say that, the impact of the COVID-19 on the economy. So this stimulus package, I have the detail later on. Out of total 250 billion, the breakdown are there. 128 billion ringgit will be spent for public welfare. 100 billion ringgit will be used to support businesses, and another 2 billion will be used to strengthen the economy in general. Next, please. So this is the summary of the package rancangan economy being introduced by the Malaysian government. So you can see 250 billion where it goes, especially to the healthcare and pandemic control, where I would like to highlight there about 8 billion, a substantial number amount is being used to give free screening services, COVID screening services to the public. And then they are also supporting SMEs, small and medium enterprises, micro enterprises, and business sectors, and so on. Okay, next, please. So these are further details of how it is going to be used. You can see that there are deferment, in particular, tax deduction, double deduction, service tax exemption, import duty and sales exemption, 6 months rental lease exemption. So there are various efforts being done, all to help those who are affected during the crisis, the pandemic crisis. Now, in the next slide, there are further details. If you look at the next slide, so that is for training purposes. During the COVID, people are not able to go to work, but they shouldn't be left idle at home. What is being done is that some funding is being given so that they can improve themselves, you know, where the government give more than 20 million for technical skills, to improve technical skills. And this can be taken, the courses for technical skills, digital marketing and so on, can be taken for free from the comfort of their own house. Specifically, next please. Specifically for the financial sector, the following are being given. Loans, deferment on all loan repayment. So this is very popular in Malaysia. Everyone is excited, and I am also benefiting from this. deferment on all loan repayment for a period of 6 months. We call it moratorium period. Okay, 6 months effective 1st April, and on credit card outstanding balances to be converted to 3-year term loan. If it is credit card to term loan with reduced interest rate. For the loan moratorium, which we do not have to pay for 6 months, there are no extra charges. It is not compounding. It's just a matter of postponing. Okay. For banks are also banks may draw down on the capital conservation buffer to help on them and maintaining a comfortable capital level. And in terms of liquidity, the central banks supply daily ringgit liquidity to the banks, and banks may operate below the minimum liquidity coverage ratio of 100%. So several flexibilities are being given not only to the banking institutions but also to the consumers, financial consumers, so that they are able to ride through the COVID-19 crisis. So what are the challenges facing the economy due to the COVID-19 pandemic? So we see that there are substantial impact on financial and economic sector. While the specific consequences are unpredictable, but there are new business models and ways of conducting transactions pose new challenges to the Islamic banks and the banking sector in general. Now, at the same time, not many people are, aware of this. Earlier, before the pandemic crisis, there were also the issue of oil price war. Okay, at the same time. So this can be considered as twin shocks and have significant impact together with the COVID, have significant impact on the economy worldwide. Okay, so according to KPMG in 2020 in their presentations, they said that both COVID-19 and oil price war affect the economy in 3 broad channels: the supply channel, the production channel, the demand channel, where the consumers are not able to purchase due to declining purchasing power, as well as the financial channels. So I want to focus more on the financial channels. Next slide, please. So these are the specific impact of COVID-19 on the banking sector. It gives impact on the business and operating model. Okay, so first of all, the COVID-19 gives impact on banking customer segments. What do we mean here? Banking customer segment, i.e., or that is corporate and individuals now are faced with severe pressure. Household income will be negatively affected as the economy slows down, while businesses, especially the small and medium enterprises, will likely to slow down. In fact, in many countries, especially and in Malaysia also, many SME, small and medium enterprises, are at the verge of closing down. And what's more, the small businesses. So secondly, there are also the need to increase resilience on digital channels, okay, where pressure on technology, technology infrastructure and resources. Customer interaction with digital platforms increase during the COVID-19 lockdown period especially, and this is the principal option, as this is the principal option for carrying out financial transactions. Okay. Now, another impact is the concern around the propositions on, and brands. And the banking institution must, tailor-made their products to the current economic and health surroundings. The workforce are also being affected. there will be disruption, or currently there are disruption in the activity of key job functions which require technology and systems that are only available on premise. Therefore, employee or bank employee productivity is expected to decline. So then we also have, of course, the impact of COVID-19 on the banking sector. Next slide, please. Especially on the various type of risks. There will be greater risks. First, increased credit risk default and lower recoveries due to inactive markets for collaterals and businesses. Then we see liquidity risk due to reduced cash inflows, like in the case of the Islamic banks or the banking institutions in Malaysia, the moratorium period of 6 months. So you can just imagine the cash inflows due to, clients or customers are not paying their monthly installment on housing. So that would involve billions and billions of cash inflows. Okay. Liquidity risk due to reduced cash inflows from loan repayment may impact banks' liquidity position. Increase cash withdrawals by depositors to meet their own funding needs, and flight to quality as customers may move their funds from banks expected to be significantly affected by the pandemic to banks that are more stable. Third is the increase of fraud, cyber threats or cyber risks due to relaxed internal control, remote working conditions, and adoption of digital channels could have expanded the attack surface on banks' IT network. Okay, so these increased risks. Also due to the COVID, there are increased market risks. How? Market risk where fair value losses due to increased credit spread, as well as the impact of forex devaluation. The possible impact of forex devaluation. Then there are also operational risks, where challenges such as business execution and process management failures, as well as potential system failures and business disruption due to change in employee working arrangement. Okay. There are also currency risks, as many banks with improperly matching the foreign currency denominated asset and liabilities could experience a significant exposure to currency risk. So you see, because of the COVID-19, the banking institutions, the banking sector are facing increased or heightened possibility of all this type of risk. Next, please. Next slide, please. Okay. Now, all of this, the combination of low business activities, as well as the increase in the risk scenario will affect the financial performance. This involves revenue and costs, bank portfolio, as well as funding and liquidity, where we have in terms of revenue on cost, income, particularly interest and non-interest, will be affected. This is due to loan restructuring that may further reduce the profit margin. Higher provisioning, okay, may hinder profitability. A non-interest income will continue to support earning growth through more push for digital transactions and channel. In terms of the impact on bank portfolio will be affected due to adjustment in asset quality and lending activities, because we see some of the sectors are more vulnerable. For example, the oil and gas sector, as well as manufacturing and services, like in the context of tourism, may worsen asset quality. Funding and liquidity, like I have mentioned just now, will be affected as well because of the postponement in payment. 6 months and billions of cash inflows are affected. So all this will affect funding as well as a liquidity position of the banking institution, let it be Islamic or conventional. So next, please. So what are the opportunities? So we have highlighted in detail the challenges, heightened or increased risks, and so on. Financial performance will likely be affected. Still, despite these challenges, there are opportunities arising, especially for the Islamic banks, where its inherent orientation towards supporting the real sector. Okay, so in general, we expect that if the Islamic banks and Islamic financial players could focus on the small and medium enterprises, this will be best. So SME are particularly vulnerable during this time, and many of them are already on the verge of collapse. Yet many of the bankers would say, how can we increase our contribution to the SME, to the micro enterprises if risk is now higher? So we look at the example or the experience of Bank Islam Malaysia in increasing their participation in the micro enterprises. Now, COVID-19 will also be a test for banks to run the digital transformation programs, because now everything is being done, almost everything is being done digitally or online. Okay, so the demand as well as the need to refine the digital banking platform is increasing due to the COVID. So this should be seen as opportunities for the Islamic Bank. Now, Islamic Bank can also be part of the COVID-19 responses through corporate philanthropy. Okay, so this will be a way to contribute not only money but also through goods and expertise. And in the context of the Islamic banks in Malaysia, where the central bank, Bank Negara Malaysia, has been proposing to the Islamic banks to undertake value-based intermediation initiative. This is the time that the Islamic banks can do it. We will see how Bank Islam take or grab these opportunities during the COVID pandemic situation. Next, please. So we see there are a lot of assistance from the Pusat Zakat. I think there are also various efforts being done by in Indonesia, Basnas. And the thing is that these institutions, it will be best for them to collaborate with a more efficient and established player in the financial sector, like the Islamic banks. For them, for the zakat institution, in terms of distribution, they are not that efficient. Okay, so how to ensure efficient distribution of zakat fund? They can collaborate with the Islamic banks. So that is exactly being done in Malaysia. Next slide, please. So this is a collaboration between Bank Islam, MAWIP, Majlis Agama Islam Wilayah Persekutuan, together with SME Corp, a government agency focusing on the small and medium enterprises. And what they do at the initiative of the Islamic Bank, it launched the program Pembiayaan Micro ITK. Okay, so if you can go to the next slide. So this is being well promoted in the website of Bank Islam. Later on, you can check. Bank Islam Malaysia Berhad, BIMB, initiates ITECAD. This is a social finance program for B40, bottom 40% of the population of micro enterprises, which aim to enable the B40 micro entrepreneurs to generate sustainable income and improve their financial resilience. So the recipient will benefit from zakat distribution, either through cash or asset. What type of asset? Purchase of equipment, machinery, or ICT tools for business, as well as microfinancing facility, and there will also be structured training program. Yeah, so it's not just about targeted market, but also there will be structured training program which involve entrepreneurship and financial management. So it is expected, still this is in phase 1, the program ITECAD has been launched sometime end of April 2020. In phase 1, implementation through collaborative efforts among Bank Islam Malaysia Berhad as participating Islamic bank, together with government agencies, like I mentioned just now, Majlis Agama Islam Wilayah Persekutuan, for the zakat aspect, as well as SME Corp as the implementation partners. And it is expected that later on in phase 2, more Islamic banks will participate together with other state Islamic religious council, not just MAWIP. MAWIP is for the central wilayah persekutuan. It could be Majlis Agama Islam Johor, Majlis Agama Islam Negeri Sembilan, and so on, and other NGOs and social enterprises. So the Islamic banks need to grab these opportunities to work together with other institutions that are focusing on the specific segment of the population that are affected by the COVID. So this is one opportunity. Now, next please. Now, this is further detail about the ITECAD. It involves a 7-step implementation approach. They call it onboarding. Okay, so it is that the bank will identify up to 100 eligible recipient at one go. Okay, and they got this through MAWIP, the Majlis Agama Islam. Then they will do upskilling. Participant will undergo structured training to enhance skills in business and financial management. Earlier, I've been teaching my Islamic social finance class. We always say that the Islamic banks, they will not do all this, or the banking institutions, they will not do all this, because this sort of products will be expensive because it requires higher overhead costs and so on. It's costly. But they can collaborate with the NGOs and other institutions in order to offer an effective financial product specifically meant for the poor or the B40 who are adversely affected by the COVID pandemic. So you can see the 7 steps. It starts from the customer selection until they are ready, their business are ready to bear fruits. Let's move on next. Now, another opportunity that should be grabbed by the Islamic Bank due to the COVID is to expedite on their digital transformation program. This I have mentioned just now. Because digital interaction becomes the primary option for clients due to the COVID-19. There are high demand for digital asset. So that will be a challenge for banks, for most banks. With the more matured banks may have the advantage. There are also challenges due to this, fraud, the increase of possibility of fraud. And digital transformation are put to test during this time, okay? And there is a need for a thorough review for the whole e-banking and e-wallet strategy because the COVID-19 has shown that the traditional way of doing banking, like issuing of checks, physical currencies, and paper plus counter services have left customers and bank employees vulnerable. Even in business transaction, in many places in Malaysia, where we are concerned about the COVID transmission, payment of food at restaurants, for example, will be done using, mobile banking. Most of the shopkeepers, they no longer accept paper currencies, all due to the COVID-19. Let's move on, please. The next slide. So therefore, more advanced online or mobile platform for retail financial transactions need to be expedited because of the COVID is providing this opportunity. For example, the banks need to further enrich the internet banking financial proposition. If earlier is for remittance, how about now for stockbroking purposes? How about now, due to the COVID, for investment in unit trusts, for giving cash wakaf, for cash wakaf collection, for is it okay to have zakat payment, and so on. So this need to be expedited. Expedite promotions via mobile banking. I think all of us are experiencing this now. Many of the banks are communicating to their customers through simple telegram or simple message. So this perhaps can be further refined as a promotion channel of banks' products. Islamic investment options are on the rise, especially those wealthy M40 of the society, and especially T20. Now that they are locked at home and they want to do financial transactions, they will go for more actively managed fund of their wealth. So this can be in the form of Islamic stock market, Islamic unit trust via online platform. There can also be, I still remember during the lockdown period happened during Ramadan, and there are a lot of online crowdfunding mechanism during Ramadan, and there are more activities of sadaqah and so on through crowdfunding during the COVID-19 period. Let's move on. Even now for Korban, there are a lot of crowdfunding efforts through mobile phones, through WhatsApp. I'm sure that all of us are experiencing it now. So there are also, according to the World Bank, the Islamic finance will be able to capture the opportunities provided by the COVID-19 through a range of financing instruments well suited for each stage of the COVID-19. This is a different analysis. According to the World Bank, in the short term, Islamic finance can provide emergency support, including zakat, wakaf, and sadaqah, which can be an important component of national and NGO emergency support programs. In the medium term, response and recovery efforts such as financing of equipment or vehicles and other sources of livelihood and trade finance are key mechanism by which Islamic banks can support, can help to contribute to the recovery process. And in the long term, this actually has been ongoing for quite some time. Efforts should be aimed at achieving recovery and build resilience. Perhaps this involves SDG, Sustainable Development Goal aligned Sukuk. In particular, I've been presenting several papers on SRI Sukuk, which can be an important source of long-term capital for government and private sector or companies engaged in the COVID response and recovery. So I want to share next, please. These are some successful SRI Sukuk. This is for long-term purposes. So you can see the green bond is one of, or green sukuk is one form of a successful SRI sukuk where Islamic finance can go into this. Vaccine sukuk, SIR sukuk ihsan, providing financing for the education sector. The Tadau Green Sukuk in 2017, and also in 2018, Sovereign Green Sukuk by the Republic of Indonesia, which will mature in 2023. It is substantial, about USD 1.25 billion, and these are mainly for financing green projects. Now, next, please. Now, I would like to share also the experience of Bank Islam Malaysia in financing in their green financing initiative. And you can see that in 2019, Bank Islam Malaysia exposure to green financing portfolio reached 1.8 billion ringgit, and they expect this to expand by another 800 million in 2020. And these data are before the COVID-19. It could be because of the COVID-19, there will be increased participation in SRI and green financing initiative. So it results in increased revenue by 20% by 2021. And what they do next, please. What they do is that they actually do not work alone. By they here meaning the Bank Islam Malaysia or the Islamic Bank. The approach that can be taken by the Islamic banks is to collaborate with other government agencies or NGOs in providing socially responsible investment or green financing here in the case of Bank Islam. So what they do is that they work together with the subsidiary of the national power company, Tenaga Nasional Berhad, to provide personal financing to install solar panels for house owners. Okay. They also tie up with Petroleum Nasional Berhad, Petronas, and involved in vendor financing program. Okay. So there are also collaboration with TNB and Sarawak Energy Berhad to involve in the clean energy initiative. Next slide, please. So these are some of the initiative or opportunities that can be grabbed, especially in the in the aftermath of the COVID-19. Regardless, of course, there are challenges faced in green financing or involving in value-based intermediation activities in terms of risk assessment, in terms of lack of ecosystem, because it is considered as new territory. But rather than being comfortable in your comfort zone, the Islamic bankers should go outside their comfort zone, go to new territories, and grab the opportunities being provided by the COVID-19. I'm not sure whether I have another slide. Next, please. So that's all from me. I hope to get input later on. So thank you very much for listening. Thank you. Back to you, Madam Anita.
Thank you, Dr. Salina. It was very inspiring, and it was really inspiring insight on how Islamic banking in Malaysia tries to survive and innovate. So next, I would like to invite our second speaker, Dr. Fany. Can I have the short CV, please, host?
Yeah, one moment, please.
Okay. Okay, as Dr. Salina just now mentioned, Dr. Fany is actually a student of Dr. Salina. He was a student of Dr. Salina, and he is now under the Faculty of Economics, Department of Management, Universitas Andalas.
I think I need to correct on that.
Oh, sorry.
I mean, Dr. Fany was here at the IIUM,
Oh,
but
okay.
I was not the supervisor.
Okay. Sorry, Dr. Salina. Okay, so this is the brief CV of Dr. Fany. He is now in the Faculty of Economics, Department of Management, Universitas Andalas in Sumatera Barat or West Sumatra. He has been teaching financial report analysis, financial management, international financial management, and some other subjects. And he is also the member of editorial board of some journals, academic journals. Next page, please. Okay. Okay. Here are some journals that he is one of the member of the editorial boards. Next, please. Okay, and here are some of his articles published on academic journals, nationally and internationally. Next, please. And this is the award that he achieved in 2014. He was awarded as Best Paper Award on Second Asian International Conference on Islamic Finance. It was jointly organized by Universitas Muhammadiyah Yogyakarta and International Islamic University Malaysia. So Dr. Fany will be discussing on Islamic banking and COVID effect Indonesia case. Dr. Fany, you have 20 to 25 minutes.
Okay, thank you.
Okay.
Let me pull up the presentation.
Okay, thank you, Pak Fikri. Okay, first I would like to thanks to Prof. Salina. Yeah, so remember working with Prof. Salina in IIUM several times in research, also discussion.
Yes, Dr. Fany, yes.
So how is this IIUM, Prof. Salina, now?
Yeah, Alhamdulillah, we are now back to office.
Yeah,
some of the students have started to return.
oh, really? Okay.
Yeah, but it's still limited,
Okay. How about the
All
teaching? The class, is it online
right.
or?
Yeah, most of the
offline?
classes are still online because we are finishing our current semester in 1 week time.
Oh, I see.
But for courses like medicine, architecture, and engineering, they have to be physically here at the university because they have to attend labs,
Sure,
studio, and so on. Yeah, hospitals and so on. But for economics, we are conducting classes 100% online. Yeah.
Online, yeah. Okay.
Thank you for asking. Yeah.
Okay. Okay. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, I would like to thanks for the INIEF, yeah, Dr. Weni, that working really hard so that we can have a discussion or webinar today about the issue of the impact of this COVID-19 pandemic to the performance, yeah, to particularly to Islamic banks in Indonesia and of course in Malaysia. For the Malaysian case already been presented by Prof. Salina. We already hear about what is going on there, and then what will be the potential or opportunities, yeah. And also I would like to thank Prof. Salina for the insight from Malaysia, and also Madam Anita and all the participants here in this webinar. Okay, basically for Indonesian, if we would like to say about this pandemic, yeah, our response is a bit late. Yeah, we were slow in responding this COVID-19. We thought that this crisis, this problem, yeah, basically the COVID is very limited. The spread is maybe only in China and the countries nearby the area. But unfortunately, after 3 months, it's the level of spreading was increasing. Yeah, as we can see, the term used was a epidemic. Yeah, yeah. Now it changed it to pandemic. Pandemic meaning the COVID-19, the spreading is worldwide. Yeah, almost every country in the world has been infected by this COVID-19. And so far, the problem, we haven't found any vaccine, yeah, or medicine to cure this COVID-19. So this we don't know what will be the end of this COVID-19. So we hope Allah will help us on this. Okay, so this is just the definition. What is a epidemic? What is a pandemic? Yeah, what does it mean? A pandemic, and we can say it's kind of epidemic occurring worldwide and over a very wide area. Yeah, crossing international boundaries. Yeah, so that's why it happens everywhere. Even many countries, yeah, like United States, that probably I think have a better health and medical facilities. They're also having problem in Europe also. So this is something which is worldwide problem. Yeah. So next slide, please. Next slide. Yeah. With regard to the name, yeah, COVID-19 stands for coronavirus disease. Yeah. The name was officially mentioned by WHO. Yeah, before people tend to call this disease as the Wuhan pneumonia or whatever. Yeah, so this is the official name for this disease. Yeah, and I heard that it has many types. Yeah, the one that spread to Indonesia maybe the one that has been spread to in Europe and other countries probably. So this so probably this expert in health, yeah, and virus studies, they are working hard, yeah, to find the vaccine for this. Yeah, it started in Wuhan, as we know that in China. Yeah, and China at that time, I think on January, start to down this city, Wuhan. Yeah, but it didn't stop the spread of this virus. Yeah, so this is something beyond their control actually. Yeah, because the virus, yeah, yeah, we cannot see the virus, so this is something which just cannot be seen. So it's hard to detect actually. Yeah. Okay, next slide, please. Okay, so the response of many countries, yeah, normally they will implement lockdown, yeah, just like what is implemented in Wuhan in China and in other countries as well, yeah, with a certain level actually, yeah. In Indonesia, we choose not lockdown, yeah, but maybe partial, yeah. We call it PSBB, yeah, pembatasan sosial berskala besar, lockdown. Yeah, probably government has their own consideration before they choose to implement that partial lockdown. And also some countries like Korea, they implement the massive I think rapid, some implement or use the rapid test, and some others using the PCR or swab test. And according to some doctors, yeah, medical doctors, the rapid test actually will not give you a clear or correct result about the condition of the people. Yeah, so better to choose the PCR or the swab test. Okay, next please.
Triple.
Next slide. Next slide. Okay. Okay. Previous one, please. Previous one. Yes, thanks. Okay. So besides having an impact in the health sector, this pandemic also results in broader crisis. Yeah. So the last big crisis happened was in 2008. Yeah, it's the global financial crisis, and the main problem was in the financial sector. But now it's from the health, yeah, from the health sector. But the cause of this crisis or the consequence of this crisis will be more, yeah, and it seems that the government, the central banks, and the regulatory bodies all over the world having the same problem. They don't know how to stop this crisis, yeah, because the main key solution to this is to find the vaccine to cure this disease. But so far, we're still waiting the result of the testing of this vaccine. Okay. So because, and it also affects the financial industry, particularly the Islamic financial industry part. And because we are talking about the Islamic banks, of course, this also will impact the Islamic banks sector. Yeah. But we can say that it depends, yeah, the impact, yeah, because if there is a crisis, the degree of the impact can be different, yeah, between one sector to another sector. Yeah. So for instance, like this, if there is a crisis, yeah, any crisis, yeah, so the impact will be more on the producer or the the company that produce goods, yeah, or services which is in the secondary or tertiary needs, yeah, not in the primary needs, yeah, like the car producer, for instance. In crisis, people maybe they don't really want to buy a new car, but they still buy foods. That's why companies that their main business, yeah, or they produce foods or other primary goods and services, probably they can survive. And also because of this, the main problem is the health sector. Of course, the health will be the health industry. Yeah, the companies who are working in the health industry will probably survive. Okay, so because our topic now is about the impact of this COVID-19 to the Islamic Bank, we'll be talking more on that issue. Okay, next slide, please. Okay, now the in Indonesia, officially the first reported positive case of this COVID-19 was announced on 3rd March 2020. Yeah. Okay. 3rd March, if I'm not mistaken. There are 2 or 3 cases found in Depok, but it happened actually in Jakarta. But the first case, the suspected case was the person living in Depok, yeah, in West Java. Okay, now the latest I got the data, 24 July 2020. The case positive case was 93,657, but I think now it close to 100,000. Yeah, it's not really a good news actually, and the mortality rate around 4.9%, which is quite worse number. Yeah. Okay, but because of the government think that if we'll isolate people or implementing lockdown, down, and it also will affect the economy as well. So now government try to introduce what we call as the new normal. Yeah, the new normal means that the business, schools, yeah, and any other institution, they can try to do their activities, but with implementation of the COVID-19 protocol. Yeah, like you have to wear your face mask, wash your hands, yeah, maintain the distance, and so on and so forth. Yeah, but the problem, maybe some people they think that this is already the pandemic is end, and they can just bring back to their normal life, which is not, it is not the case. Yeah, we are not, the pandemic is still going on. Yeah, and we don't know when it will end. Okay, next slide, please. Okay, now we are talking about the Islamic banking, the current condition in Indonesia. The data is available. You can find in OJK, yeah, Otoritas Jasa Keuangan, the supervisory body of financial industry. Okay, I got the data on 2008. The market share was 5.96%. Yeah, probably now close or more than 6%. Yeah, compared to the overall, and also its share of Islamic financial asset was 38.03%. And on 2007, Bank Aceh, yeah, and Bank NTB was converted into full-fledged Islamic banks. Yeah, and next probably inshallah Bank Nagari in my province, West Sumatra, will they got approval from the shareholders to be converted into full-fledged Islamic bank. Okay, so yeah, if Bank Nagari converted, and maybe some others banks, they choose to be full-fledged Islamic banks, then we can have more share in Islamic banking assets. Yeah. Okay, next, please. Okay, so this is the list of Islamic banks in Indonesia, and also we have Islamic windows. Yeah, or we call it unit usaha syariah, ya, UOS. Yeah. Bank Umum Syariah means Islamic Commercial Bank, full-fledged Islamic banks. Unit Usaha Syariah is Windows, Islamic Windows, which is conventional banks that open their, they have like Islamic windows, yeah, so people can open or have a transaction for Islamic banking account in that windows, yeah. Okay. Next slide, please. Okay, so up to April 2020, for Islamic banks, Islamic commercial banks, we have 14, yeah, yeah, plus the latest Bank Aceh and Bank NTB, the one that have been converted into full-fledged Islamic bank. So we have 14. And Islamic rural banks, or BPRS, we have like 163, yeah, 163 Islamic rural bank, and Islamic windows we have around 20. Yeah. Okay, next. Okay, now about the statistic, yeah. But unfortunately, the available data is only up to the first quarter, yeah, or up to March or April. Yeah. So we are waiting the second quarter, because government and also central bank expect that we are going to have like, and probably, yeah, if the second quarter and the next one, third quarter, the growth of GDP is negative. So technically, we can say that Indonesia is in a recession. Yeah. So this is based on the Islamic banking statistic available in the website of OJK. So with regard to the capital adequacy ratio, yeah, So the level of the CAR of Islamic banks in Indonesia is quite good, yeah, even increased, yeah, by 4.38%, yeah, year on year, yeah, compared to April last year. Okay, and ROA also, yeah, slightly increased, yeah, about 1.9%, yeah. However, the next one is NPF, yeah. NPF decrease, yeah, which is good, yeah. If NPF decrease, the non-performing financing decrease means it's a good news, yeah. Meaning that that Islamic bank have lower level of non-performing financing, yeah. Meaning that people can repay their financing in Islamic banks, which is good, yeah. And the financing to deposit ratio, yeah, a little bit decreased, yeah, about negative 1.6%. And okay, can we have a break first because we have Azan here?
Sure, sure.
Okay, about 2 minutes, yeah, sorry. Okay. Sorry. Thank you. Back to the presentation. Okay. Next statistic is OEOR, yeah, operating expenses, the ratio of operating expenses to operating revenue, and also Islamic banks experience declining in the, basically is the ratio suggesting that Islamic banks during 1 year experience efficiency or declining in the cost, yeah, that's, which is good. And the net of NOM, net operating margin, the percentage I think it's wait, I think it's decreased. It should be red. Yeah, it should be negative. Yeah, and the assets, yeah, the assets increased by 10.7%. So that's the statistic. Yeah. So basically, from this statistic, but we're still waiting for the second quarter data, yeah, released by Otoritas Jasa Keuangan and by other institutions. So I think the worst, yeah, period will be in this second quarter, and probably if it still continues to the next quarter, yeah, because as it is being said before that Indonesia first officially announced their first COVID case was on March, yeah, but I think people still don't know what is going on, yeah, at that time. So after several months, yeah, in economics we call it lag, yeah, the impact will be after that, yeah, the impact will be a few months after March, yeah. So we expect that probably on the second quarter, April, May, and June, we will get like a negative figures, yeah, of this statistic. Okay, next slide, please. Okay. In Q1, yeah, in Q2, of course, in Q1, yeah, sorry, in the Q1, yeah, Q1 of 2020, yeah, January, February, and March, we can say that Islamic banks might have a relatively good performance, yeah, or from the data also we can say the yearly data in the previous slide, yeah. And also the latest data I found, yeah, from BNI Syariah and BRI Syariah and BCA Syariah, report increases in the growth rate, yeah, of financing and deposits, yeah. Yeah, so still we find the growth, yeah, of financings and deposit of these big Islamic banks in Indonesia. Yeah. Okay. So the next thing that I would like to say, yeah, probably Islamic banks enjoy flexibility in making cost adjustment. Yeah. If we go back to the principles of Mudharabah and Wadi'ah, basically Islamic banks, yeah, in terms of deposit, yeah, or savings account, they can make like adjustment. Yeah, it is not compulsory for them to give profit, to share profit with the depositors, and the saving account, because of this, under this contract, basically Islamic banks will just in Mudharabah, they will share if there is a profit. If there is no profit, then they can make like adjustment, yeah. And also Wadi'ah, yeah, Wadi'ah also is not compulsory because it's like a safekeeping, yeah. Yeah, if we go back to the principle, Wadi'ah, basically it's the saver, yeah, the one that saved the money, yeah, that should give their I mean, like fee for Islamic bank keeping their money. But in this case, yeah, still we, because of we are under conventional system, Islamic banks normally share we call it bonus, bonus to the Wadiah saving account. But in this case, it is not compulsory for them also. It depends whether the Islamic banks in the situation of having extra profit, so they can share it with the Wadiah saving account holders. Okay, next. Next slide, please. Next. No. Next. Okay, now with before previous slide, please. Yes. Okay. With regard to the challenges, this is because we can say it is a crisis now. It is not only a recession. Like Singapore and Korea already declared that they are in recession, but it keep going on, and it all happen all over the world. So technically, we are in crisis. It increased global uncertainty and systematic risk. Due to declining in demand and consumption. So in finance, we know that if it is a systematic risk, so it affects everybody. It affects every companies, every sectors. So not many things we can do. So probably some companies will implement their risk management techniques and tools, but since it's everywhere, it affects everything, every single aspect of this economy. So the effectiveness of the risk management also is being questioned. And also the effectiveness of prediction tool, forecasting tools, it being questioned. Probably we need a new model, particularly when making some sort of prediction during the crisis time. And the government and central bank also predict Indonesia is likely to experience a negative GDP growth in quarter 2, or in Indonesia we call it triwulan, triwulan 2 and triwulan 3, Q2 and Q3 of this year. If they in economy, if they are after 2 quarters, the GDP growth rate is negative, so we can say this is a recession. Which is not good. As it will affect many participants in the economy. And the challenges also no vaccine so far to cure this COVID disease. Okay, next. And okay, now we go to the consumers. Due to uncertainty, consumer prefer to save money or limit consumption and invest in gold. If we look at the gold price now is they're increasing, the trend is increasing. People now want to invest in the safe haven assets. The gold is is the best in that case. Okay, low consumptions can be translated into producer experience low or even negative cash flows. So because people reducing their spending, for instance, in tourism, one that badly affected is tourism, because people now they don't really want to go or have having a journey of traveling. So we heard that many airlines, hotels, they have a huge debt, and probably they have to lay off some or even most of their employees. So the next consequence, the companies shut down the operation and lay off their employees. And as for Islamic bank, basically the performance is likely to deteriorate in Q2 of this year, 2020. Okay, next. Next slide, please. Okay, can I have the next slide? Okay, so this is the next consequence. Yeah, the companies that obtain financing, yeah, from Islamic banks, particularly, will find it difficult to repay. Yeah, although the government, yeah, and the Financial Service Authority (OJK) already give, like, in Malaysia we call it moratorium, or relaksasi, yeah, relaxation in repay the loan, yeah, but still it is difficult for some of them, because I heard that some of this, particularly in UKM, yeah, small and medium enterprise, even their income up to zero, they earn nothing. Yeah, so it's really tough. Yeah. Okay. And okay, now Islamic capital market also will experience barriers, because investors tend to sell securities rather than buy. Yeah, if except for some entities, yeah, or sectors, like in the health or gold mining company, probably their share price tend to increase. Yeah. Okay. Okay, next. Okay, now we talk about the opportunities. Yeah. So basically my dissertation in IIUM, I wrote about the non-traditional or non-interest income activities. Yeah. So it's a kind of a new opportunities, yeah, for commercial banks, because they have tough competition. They experience very stiff competition with the other financial companies, yeah, insurance, capital market, and so on. Now they try to have like a side, yeah, they have another income from non-traditional or fee-based activities. Yeah, so this is something that they need to improve. Yeah, especially when people now tend to engage in more on online or selling and buying activities, so they can provide more facilities, application, yeah, and whatnot, to improve, to help their customers or anybody to facilitate this transaction. And also Islamic banks or Islamic financial industry need to link, yeah, or have a close relationship with the halal industry. Now there is a new term called as halal industry, halal tourism. Yeah, it is not only about foods, yeah, and many things. Yeah, but we are not sure whether this halal hotel, for instance, yeah, or in Indonesia we call it hotel Sharia, whether they already using the financing from, or whether they already get the financing from Islamic bank, or they just in their operation they implement the halal or Sharia compliance procedures, but in their financing they're still using the conventional, which is not really actually halal or Sharia compliance. So the Islamic banks and the halal industry need to really work together to support each other. Yeah. And also Islamic banks need to employ the latest and advanced technology, because we are in the fourth industrial era now, yeah, or digital era, yeah, disrupt era. So the financial industry need to really catch up, yeah, update their websites, application, and any facilities. So because now people tend to use that, especially during this COVID-19. Yeah, and also there is a news circulated, yeah, the plan to merge 3 Islamic BUMN banks, yeah, government-owned banks, yeah, BNI, BRI, yeah, Bank Rakyat Indonesia, and BSM. This just mentioned by the Ministry of BUMN, yeah, Pak Erick Thohir. Is a good, actually good idea, but we are waiting what will be the result. I mean the progress of this idea. Okay, next.
Dr. Fany, could you please speed up?
Yes, thank you. Okay, the next thing is the Islamic banks, particularly need to increase their liquidity and capital buffer. As we know, for those who are already familiar with banking is a kind of industry that operate with very high leverage level, very high debt level. Debt meaning that they are borrowing money from the depositors, and leverage to me is not good, especially in crisis. It will create more problems. So as it is suggested by many experts in financial and banking industries, also the banks, particularly in crisis, need to increase their capital to absorb the potential worst scenario of this crisis. And the risk-sharing equity-based model is preferable than debt-based model. For those who are already familiar in Islamic banks, we have equity-based and debt-based. Then the Islamic banks need to engage more on equity-based. And if we like to learn from the past crisis, the low equity level can be disastrous in the time of high uncertainty like nowadays. Okay, next. I think do I have another slide? Okay, the conclusion. Okay, as a Muslim, mu'min is a test for us, for everybody. And maybe there is a hikmah behind this COVID-19. Probably we have a more clean air, for instance, low level of pollution. And also it's a momentum, I think, to improve and to provide the financial system. And in Indonesia, we call it hijrah, hijrah from usury and all systems that are contrary to the revelation. So we hope that our financial system, and particularly the Islamic financial system, can really be in accordance with the teaching of the Quran and Sunnah. Okay, I think that's all my presentation. Sorry for the extra times, and I give it back to the Miss Anita. Thank you.
Thank you, Dr. Fany. It's interesting insight as well, explaining how is Islamic banking in Indonesia surviving during this COVID-19 pandemic. So now I would like to open the Q&A sessions, but before that, I would like to give the first chance to Dr. Weni Hawaryuni from INIEF to give some comments or questions. Dr. Weni, please.
Okay, thank you, Sister Anita, my beloved sister from IIUM. And also, thanks a lot for Professor Dr. Salina and Dr. Muhammad Fany Alfarisi as a presenter today. Both of you give the very informative topic about the strategy of Islamic Bank Indonesia and Malaysia to face the COVID-19 situation currently. Okay, without further ado, I just want to address simple question to both of the speaker. First, to Prof. Salina. Assalamualaikum, Dr. Salina. How are you?
Waalaikumsalam, Dr. Weni. Yes.
Long time not to see you, Prof.
Very nice. Yeah, you're sitting on the seaside at the beach. Yeah?
The background only.
Yeah. to relax my mind. That's why I put a picture like this.
You need that. You need that. Yeah.
Okay, Prof. Salina. Just like asking you one question only. Do you think that the policy issued by the Central Bank of Malaysia, okay, especially for Islamic banks, can helping the Islamic banks survive, or maintain the profitability during the COVID-19 situation? That's my question for Prof. Salina, Dean of IBF. The second question I will address to Dr. Muhammad Fany Alfarisi, the lecturer from Universitas Andalas, West Sumatra. Dr. Fany, from my opinion, is it like the strategy about the Islamic bank issued by our Central Bank of Indonesia, is it working or not? Okay, for Islamic bank currently, because we can see right, the economic now up and down in Indonesia, yeah, because the victims of COVID-19 is getting increased from time to time.
Yes.
So I'm just worried about the progress or the performance of Islamic bank in this time. So I just asking you, is it already okay, the policy issued by Central Bank of Indonesia to save, yeah, or to maintain the performance of Islamic bank in Indonesia? I think that's my question for Dr. Fany. Thank you very much for both of you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Dr. Salina and Dr. Fany, is it okay if I give you more questions so you can answer all of the questions sequentially? Okay, so we have we have one question on the chat room. It's from Bapak Hazmi Rapi. The question is how various Islamic finance instruments can be used to support the recovery efforts in different countries. This is the first questions. Maybe I will give it up to you. Maybe Dr. Salina or Dr. Fany who will answer. And we have one more questions on Q&A chat room from Buteti Juliati. She asked that the difference between Malaysia and Indonesia is that in Malaysia, Syariah Bank is supported by top leader, and in Indonesia is grassroots approach. How is the prospect of Syariah Bank in global digitalizations for Indonesia? Because the customer and people prefer more to do transaction online, and Syariah Bank in Indonesia has less digital product. I think maybe this questions is for Dr. Fany, so maybe the first questions could be answered by Dr. Salina. So that is all the questions that we have now. Maybe I will give the first chance to Dr. Salina to answer.
Yes, thank you so much for the question. Very good question. I think it is very relevant to ensure that the business survival of the economic agents are being, taken into account. What we have, the COVID and how to deal with the COVID pandemic is that it has never happened before. Okay, so I was asked to switch on I didn't realize that I didn't switch on my video, sorry. Right, so I think it is a commendable effort by the Central Bank of Malaysia, and it is actually being taken by central banks of almost all countries to ensure the survival of the banking institution. So I think a quick question to your answer, to your question, a quick answer to your question, that Tweni, regarding whether the policies are effective or not. I would say that these are the best that the central bank can do in order to ensure that the impact of the COVID will be softened, or the impact of the COVID will be minimized to the Islamic banks in particular, and the industry players in general. Now, at the same time, I think it is very important. I think that's the reason why we are here today. We want to discuss what are some of the opportunities created by the COVID that should be grabbed by the Islamic banks. So the Islamic banks, apart from the policies instituted by the central bank to help them to deal with the crisis, there should also be a preemptive or proactive effort by the Islamic banks to grab those opportunities, so that their business will continue to thrive and they can ride through this challenging period. Regarding the second question, what was the question again? Just very quickly, please, Madam Anita.
The questions ask how the various Islamic finance instruments could be used to support the recovery efforts in different countries.
In different countries. So I think in general, Islamic finance instruments vary. based on the various contracts in Islamic finance. We have musyarakah, we have mudarabah, we also have qad hasan, and so on. So by matching the nature of these instruments to the specific stage of the pandemic, the recovery, as well as to the specific customer segment, I think that will be most effective. For example, in countries where perhaps SME, I mentioned just now in my discussion that SMEs are very much affected. So in that case, it could be the contract of ijarah can be implemented in order to buy assets, and perhaps we can also have some products which are specific to the B40 woman entrepreneurs. So we can have ar-rahnu, for example. So it all depends. It all depends on the target market, as well as the stage of recovery. I also mentioned about for long-term recovery, the Islamic finance industry can play a role in issuing the SRI Sukuk just now. There are also efforts, SRI Sukuk, not just for education sector, but also to issue SRI Sukuk for the microfinance sector. So these are happening and studies are being done. It's just that implementation are not really there because, like I mentioned just now, it's considered as new territory. SRI Sukuk for microfinance. So I hope that's why I end my discussion just now more of calling on banks to get out from go beyond zone of just consider and make collaboration in order to sing agriculture financing and things like that. I hope that answered the question, inshallah. Thank you.
Thank you, Prof. Salina. Dr. Fany, please.
Okay, thank you for the questions. Okay, regarding the strategy, I believe that this is general strategy. It's not only for Islamic banks, but the policies, actually, the policies issued by Financial Service Authority, for instance, like giving relaxation. Yeah, they already outlining. Yeah, you just check in their website how to get the moratorium, yeah, in repayment of loan, yeah, particularly those who are badly affected, yeah, because many people, yeah, those who have like financing, yeah, or credit, yeah, from leasing or banks, yeah, they cannot pay on time, even they have no money to repay. So this is something which is one of the policy, yeah, that of the Financial Service Authority, yeah, that you can get like 3 months, 6 months, 9, or even 1 year, depend on the condition or your situation. Yeah, but most probably you have to talk to your banks and leasing companies in that to get that facilities. And I believe that is in accordance to the Islamic teachings. Yeah, if we go to the principles, basically, if somebody have if someone has difficulty in repay the loan, so you need to give them more time, right? Not push them or even seize their assets, for instance. Yeah, probably after 1 or 2 months, yeah, you can check whether probably their condition improves so they can repay the loan on time. Yeah. Number 2, I think is about the instrument. Yeah, it's the instrument. Yeah, actually, this is something which is not true. We never experienced this before in our life. yeah, probably the latest big pandemic like this will happen in 1920, if I'm not mistaken, is the Spanish flu at that time. Yeah, it spread all over the world like this, and it's a long time ago. But the current one is this, yeah, the COVID-19. And as far as I concerned that the instrument, yeah, mentioned by the central banks and also the governments, yeah, just to I mean to ease the pain, actually, yeah, it's not really solve the problem, but at least it helps the small and medium enterprise, let's say, to survive, and companies as well, yeah, because it affects many level of the economy, yeah, from the bottom one up to the higher level. So with regard to the instrument, I believe that the instrument of social finance is workable, yeah, like wakaf, zakat, yeah, as the assistant for these affected people, yeah, those who lost the job, yeah, or maybe they have a substantial decrease in income. So like the zakat fund or wakaf fund can help them at least to survive, yeah. And sorry, the question number 3, I don't really get the question. Can you repeat, Miss Anita?
It's more on digital banking. How ready is Islamic banking in Indonesia being digitized? Because now it's still low. Given that, as Dr. Salina mentioned, in the future, digital banking will growing more compared to offline banking. But given that now it's still low in Indonesia, so what do you think the prospect is?
Okay, exactly. Yeah. So with regard to digital banking, I don't really have the data or the percentage, but I think it's lower compared to probably Malaysia or Singapore or any other Asian countries. How to improve, yeah, the level of participants see of these customers? I think that the Islamic banks need to, yeah, I mean, persuade them more, yeah, promote how easy is to use the digital banking for the customers, particularly during this COVID-19. If you want to buy something, you just using your internet banking or e-banking to pay, yeah, and using now so many companies provide the delivery, yeah, like Gojek, Grab, and whatnot. Yeah, you can buy food and everything online. But if you don't have that, then it will be difficult. Yeah. So by giving or keep promoting, yeah, to the customer, I think it can increase the level of digital banking participants in Indonesia, and also particularly the Islamic banks or and also the government agency, OJK and whatnot, to promote to this millennial, what we call it, because they are really familiar with all this technology. For the older generation, they might find it difficult. Yeah, even they are afraid. Yeah, even my colleague, yeah, some of them, they don't really want to use the digital banking or making transaction through the online because they're afraid that their data will be stolen by somebody or hacked by somebody. So in that case, so banks need to, yeah, give more protection, yeah, of course, yeah, because of this the breach of this data security has become the issue now. Yeah, I think that's my answer to this question, inshallah. Yeah.
Yeah, I think we have already answered all of the questions, and now it is already 1 p.m. Indonesia time and 2 p.m. Malaysia time, I believe. So maybe I would like to invite Dr. Salina and Dr. Fany to give the closing statement from both of you regarding this Islamic banking and COVID-19. How confident are you that we can win this COVID-19?
I don't have much, prediction to make, but I think it all depends on how we deal with it now, and also how fast the economy can a restart. And it all depends very much on sociologically whether we want to adopt the new norms and things like that. So apart from that, I think this COVID pandemic is unprecedented. So you can see actually there are a lot of opportunities created by COVID-19, even in the academic sector, not just the financial sector, even in the academic sector. Now we are more comfortable using online classes, while earlier we are all very afraid of using or using online platform to teach classes. So while this is something that is bad, the pandemic, but definitely there are a lot of opportunities that we can grab and things that we can learn, so that in the future we are better able to handle this pandemic crisis. That's all from me. Thank you for this opportunity.
Thank you, Prof. Dr. Fany, your turn.
Okay. As I said in my conclusion, so it is time for us to really look what is the hikmah, what being said by Prof. Salina, but we have many opportunities actually, and we are also giving more care about our health, about our society, for instance, So and also this is the time for us to go back to the principles, probably this hardship happened because of our sins, because of our collective sins, because of we are really not really in line with the teachings of Quran and Sunnah. So we need, and also this is particularly in Islamic banking and finance, because apart from this progress that we have, still we find many critics, from the scholars, about the practice and whatnot. So we need to go back to the principles and to purify our financial system. I think, inshallah, if this is something which happened, not maybe we don't know when will it end, but we hope that we can learn a lot from this. I think that's for me.
Okay, so I think we have reached the end of today's international webinar. Once again, I would like to thank Associate Professor Dr. Salina Kassim. Thank you very much for sharing your insight from Malaysia experience, and Dr. Fany, Dr. Muhammad Fany Alfarisi, for explaining to us challenges and opportunities for cases in Indonesia, and also to Bapak Zulfikri and Dr. Weni Hawaryuni from INIEF. Thank you and congratulations for organizing this webinar. And I hope all of the participants could take the insight that even though we face several challenges, so many challenges, so many threats, but inshallah we can win this. There are still opportunities that we can optimize in order to pass this test from Allah. So hopefully after this pandemic, everything will get better and improve, especially for Islamic banking and finance. So for the participants, please don't forget to fill in the link that I provide on the chat room. Your e-certificate and the materials, the slides from the speakers will also be sent to your emails, inshallah. So once again, thank you very much for all participants and speakers. Let's close this international webinar by reciting Hamdalah. Alhamdulillah Rabbil Alamin, and doa kifaratul majlis. Subhanakallahumma wa bihamdika, asyhadu an la ilaha illa anta, astaghfiruka wa atubu ilaik. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Thank you, Prof. Thank you, Dr. Fany.
Thank you, Prof. Salina.
Thank you.
Thank you, Prof. Salina, Dr. Fany.
Thank you,
Thank you.
Prof. Salina,
Fikri.
dan Dr.
Long time.
and the participants. Thank you very much. Inshallah,
Selamat
see
hari
you next webinar ya.
Selamat Hari Raya.
Iya.
Ya.
Ah, ya,
Selamat
ya,
Hari
ya.
Raya.
Selamat Hari Raya. Insya-Allah this Friday.
Insya Allah
Yes.
this coming Friday.
Take care everyone. Assalamualaikum.
Thank you. Waalaikumsalam warahmatullahi wabarakatuh.
Warahmatullahi wabarakatuh.
Thank you.